Gifting while you're alive has many advantages, including you get to see your kids enjoy the pride and the fruits of your labor while you're still alive. Another thing is that it shrinks your estate so that if you pass away or if you're no longer there, your kids will pay little taxes. So it shrinks your estate. You get to see your kids enjoy the fruits of your labor while you're still alive. However, many people, they're afraid to gift without having substantial tax consequences. That is, they're afraid that if they gift their kids away their possessions while they're alive, they're gonna have to pay a bunch of taxes. However, this presentation, I'm gonna be looking at how you can reduce the amount of taxes that you will have to pay so that it's not gonna compromise your own retirement. You're gonna be able to reduce your estate, and you're gonna be able to see your kids enjoy the pride and the fruits of your labor while you're still alive. This is all about gifting. But first, you may want to hit the like, subscribe, drop a comment down below, show the channel some love. In case you haven't met me before, my name is Leon Mann. I'm a licensed wealth consultant with Money Assist Financial. And what I do, I help hardworking folks, perhaps it may even be yourself, but I help them to add an additional multiple 6 to 7 figures to their retirement portfolio. I'm able to do this by providing a free, no obligation financial guideline. This works much like a GPS. It's gonna allow you to map out where you would like to be based on where you are currently are. So it's like handing you the coordinates to your GPS and letting you follow the road to get there, right? Now, the first thing you want to consider when you're gifting is that gifting tax in Canada is a myth. So that we're fortunate enough here in Canada, we don't pay any taxes on gifting, right? That is, you don't pay taxes on the gift directly. If you give your kids money, if you give your kids investments, you don't pay taxes on the gift directly. However, to the giver, there can be tax consequences. For example, if you give away money from your bank, there is no taxes. But if you give your kids things like investments, rental properties, they're gonna be paying a capital gains tax. Because according to the CRA, when you gift away a property, let's say it's a rental property, while you're alive, they're gonna treat it as if it was just sold at the fair market value. So whatever the value is of that asset at the time that you give it away, you're gonna be treating it as if it was sold. So you pay the capital gains tax on the appreciation. You wanna keep this in mind when you're gifting things like assets that have increased in value, right? So you will have to pay some form of taxes during this process. Now, the second thing is timing. Timing is everything. When you gift away an asset like a rental property, like investments, you will have the chance to see your kids enjoy these gifts while you're alive. You'll basically get to experience their joy, their happiness, so that you know exactly how your legacy will continue on afterwards, right? So you have a pretty good idea and peace of mind where you are in terms of your legacy being continued. The second thing about gifting while you're alive is that you can shrink the value of your estate. And by doing this, you lower the estate administration tax. This basically means that every asset that you have that is over $50,000, there is a 1.5% tax on it. By lowering your estate value, however, you're able to lower this tax, right? So gifting while you're alive, it has significant tax advantages while you're alive, so that if anything happens to you, they're not gonna be paying that large of a tax bill, right? Now, the third thing is it's not how much you gift, but it's how you're able to gift. For example, if you're talking about things like investments, it's a wise idea to gift a smaller amount lump sum annually rather than gifting everything all at once. Because by gifting everything all at once, you're only going to be subjected to be in a higher tax bracket, right? So you're going to pay more capital gains tax if you do it all at once. So you want to gift away a little at a time every single year as to have more control over how much taxes that you're going to pay. Secondly, is you want to use things like life insurance. Now, I know that life insurance may not seem like a gift. However, with life insurance, you're basically providing your kids a tool. It's basically like an asset preservation tool. It's going to allow them to pay the taxes of the estate when you pass away or when you're gone. What happens is if these assets are being taxed, they're going to be able to use the proceeds, which is tax-free, by the way, right? It's not going to affect income. It's not going to affect tax brackets. The beauty of life insurance is that it does not count as income earned. It is tax-free money that you're gifting them. This is their final gift that they're going to get from you. And they're going to be able to use the proceeds of the insurance to pay off things like fees and taxes, right? So in actuality, life insurance is a way of asset preservation, right? It's going to allow them to keep the majority of your possessions when you're no longer there. But fourth of all, you want to also protect yourself, your own retirement, meaning that you don't want to contradict and sabotage your own retirement. So you want to look at things like your OAS, things like your CPP, things like your investments that you have to make sure that you can afford to gift away some of these assets, right? That's the last thing you want to do, is to compromise your own retirement. Secondly, is you want to make sure that any gifting does not cause an OAS clawback, because it can push you in a higher tax bracket as well if you're gifting away. Thirdly, you want to stress test your retirement. For example, you want to look at inflation rates, you want to look at increasing health costs and long-term care expenses so that you're ready for it and you don't gift away too much of your investments, for example, right? Or things or rental properties for that nature. So you want to make sure you don't compromise your own retirement. Last but not least, you want to document every single gift that you give your kids. You want to write down their names and you want to document it in paper, right? So that if there's conflicts, they can use it in court as evidence that, yes, you did gift so-and-so this asset, and there could be less conflicts. Bottom line, guys, is that it is totally possible to gift away your assets while you're alive, but you want to make sure that what you gift away is in alignment with your retirement and your financial goals and purpose that you have in mind. But it is totally possible. You may also want to talk to a financial professional with regards to calculations and things like taxes and things like fees, for example, to see if it's really worth it. But I thank you guys for tuning in. Feel free to share this video. Feel free to hit a like, subscribe, drop a comment. Until next time, peace and love. Take care.